SoFi is up over 60% since hitting its low point back in August, but this was a significant week for SoFi stock. Not only did SoFi hit its 52-week high, but SoFi stock has finished the week over $10 for the first time in more than a year. I've been saying for months that this was going to happen, but with so much on the line now, considering there is only a few days before SoFi earnings, what is going to happen next? Will SoFi soar to new highs or crash back below $10? In this video, I will look at this and look at the very latest news heading into what could be the biggest week of the year for SoFi stock. Before we get into the video, I want to thank everyone who has welcomed me back to YouTube in the past week. It's been so good to hear from all of you. But if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it with some of the latest news. The first thing I want to mention very quickly is this. The Biden administration said on Thursday that it is forgiving an additional $4.5 billion in student loans for over 60,000 public service workers through its Public Service Loan Forgiveness Program. Now, we all know this is not the first time this has happened. In fact, it's starting to feel like that every time SoFi goes on a great run of consecutive green days, this announcement comes along and halts it. But SoFi has bounced back again quickly. And not to worry, because SoFi is right where it needs to be before earnings. So earlier this week, SoFi announced some huge news that proved to be a big catalyst for the stock. The first of these deals was a $2 billion agreement with Fortress Investment Group. SoFi announced a $2 billion loan platform business agreement for personal loans with funds managed by affiliates of Fortress. The agreement will expand SoFi's capabilities in its loan platform business, where the company refers pre-qualified borrowers to loan origination partners as well as loans on behalf of third parties. To put this into perspective, Fortress is a leading investment manager that manages over $48 billion of assets under management on behalf of approximately 2,000 institutional clients and private investors worldwide. And speaking after the agreement, CEO Anthony Noto said that SoFi's loan platform business is an important part of the strategy to serve the financial needs of more members and diversify towards less capital-intensive and more fee-based sources of revenue. We're pleased to see continued strong demand for SoFi's loan platform business, with Fortress's collaboration, seamless execution, and appreciation of the platform's value proposition makes them an exceptional partner. So all of this is a big deal for SoFi going forward. And once again, it's a great sign of the level of growth that SoFi is experiencing. Now, since this agreement, SoFi stock has risen to over $10 for the first time this year. But Forbes believes that SoFi could hit $15 very soon, and it's based on three key criteria: an expectations-beating second quarter earnings report, fresh investment from Fortress, and lower interest rates, which could boost loan demand and reduce delinquencies. So since we've already talked about points 1 and 2 in some detail, it's worth noting that lower interest rates could boost loan demand. SoFi management is likely to become less concerned about the risk of high interest rates, causing economic activity to slow, people to lose their jobs, and loan losses to rise. Where SoFi management were quite pessimistic at the beginning of the year, the Fed interest rate cut in September suggests that management may become less pessimistic and profit from improved economic activity, such as lower prospective loan losses and possibly increased demand for loans. And analysts are bullish about SoFi too, stating that SoFi's business model could make banking better. SoFi could outperform the market for years as traditional banks become less relevant. As it says here, SoFi is transforming banking as the beneficiary of what we consider a generational business model shift. Now, SoFi did announce some more good news too, but before we look at that, SoFi earnings is only 10 days away and the stock is up over 20% in the past month and up over 50% in the past 2 months. Now, the last time I did an earnings preview video on SoFi, I was spot on with my predictions on all the growth figures as well as the revenue and EPS prediction. If you would like an earnings preview over the next couple of days, then drop a comment below and let me know. If I get 500 likes on this video over the weekend, I will make an earnings preview on Monday. Now guys, as you know if you follow this channel, I do a lot of reading and analysis before I talk about any stock that I cover on the channel. As far as I'm concerned, the more you know about a company, the more likely you are to predict what is going to happen next. It's important to look at both the positive and negative opinions and draw your own conclusions. And this is a very interesting bit of analysis on Seeking Alpha, talking about SoFi's increasing bullish momentum and goes through an increasingly bullish thesis, but also looks at some key risks. So guys, I'm only going to take a quick look at a small part of this article, but there is a link to the full article in the description for anyone who wants to have a read of it. If you need a Seeking Alpha account and are considering signing up, then please consider using my link in the comments below, where you can get my special discount, and it really helps the channel out too. Seeking Alpha has a ton of SoFi analysis pieces as well as loads of other stocks where they give ratings so you can easily pick out the best stocks going forward. So make sure to check this out. There is a link below. Anyways, as I said, this article looks at some key points about SoFi right now, so let's take a look. SoFi's member base grew by 40% year over year in 2023, demonstrating strong retention and cross-selling power. The ratio of financial services to lending products increased from 2.7x in 2021 to 6.2x in 2024, boosting lifetime value, and recent earnings showed SoFi consistently beating EPS estimates with 11 upward revisions in the last 90 days. So growing member base and cross-selling power. So if we go back to 2021, SoFi had an explosive 110% year-over-year growth in members, showed its rapid initial traction in the market. But now in 2024, this year-over-year growth has decreased to 41%. However, as I've said many times before, this is still very impressive growth. In fact, it's better than it ever was in 2021. That 110% was an increase from 1 million members to 2.2 million members, an increase of just over 1.1 million. However, because of the huge growth in members, SoFi now has close to 8.8 million. An increase of 40% now is closer to 3 million members. So if SoFi was to continue to have just 40% year-over-year growth over the next 2 years, that would mean 12.3 million members next year and a little over 17 million members in 2026, which would be over 15 times as many members as SoFi had just 4 years ago. And we can see on this graph that while the growth has dropped, it has also remained consistently in the 40% range over the past 18 months. But it's SoFi's ability to cross-sell its products that will be the company's major growth driver. Now, on the flip side, rising loan volatility threatens SoFi's mortgage growth. As it says here, as of June 30th, 2024, the interest rate lock commitment funding probability has shifted from a narrow range of 71 to 72% in December 23 to a very broad range of 50% to 89% in Q2 2024. This reflects growing uncertainty in loan originations, particularly in the mortgage sector. Such fluctuations can indicate a higher level of unpredictability in SoFi's home loan segment. A decline in scores means that loans are approved for borrowers with more adverse credit histories, and scores decreased in the student loan segment from 768 to 764, indicating that SoFi started taking borrowers with lower credit scores. So guys, what do you think of this? It's only a 4-point drop, but it could represent a meaningful change in the risk profiles when spread across a large portfolio. Now, I said earlier in the video that SoFi had more big news, and that has to do with Galileo. Now, when you consider SoFi's huge growth over the past few years, and especially over the past year or two, Galileo has been somewhat disappointing, with year-over-year growth coming in as low as 10 or 11% for some quarters. But SoFi just announced that it is to adopt Galileo's Cyberbank core for new commercial payment service sponsored banking program to power a range of payment services to commercial clients, including debit, prepay, ACH, and wire transactions and associated banking services. And we can see here the wide range of benefits for clients. And this implementation of Cyberbank Core is expected to be complete in November 2024. So importantly, is SoFi a millionaire maker stock? And this is a question that seems to annoy a lot of people because there is an awful lot of people that are down a lot of money on SoFi. You know, the stock is down about 75% from its 2021 high. And if anyone followed my channel back in 2021, I was not bullish on SoFi as I thought that this was an overvalued company based on the numbers. But now the numbers make sense. This is no longer a loss-making company with small revenue and a small customer base. SoFi is growing and they are consistently proving the doubters wrong. SoFi's price-to-book ratio is in the mix with America's mega banks. They are more established than SoFi but lack the growth potential. The valuation is now sensible enough that investors could realize much of SoFi's future growth as investment returns. Management expects book value to increase by $800 million to $1 billion this year, roughly 20 to 30% jump over last year. SoFi's valuation is small enough that years of consistent high-speed growth could make long-term investors very rich if they're patient enough. And just one last point here I want to make about patience, looking at Nvidia. Nvidia's growth was so slow for such a long time. From 2014 to 2017, it was barely 50%. Again, from 2017 to 2020, barely 50%. But then over the past year, there has been exponential growth. It took years of patience to get to this point. And now you see all the posts online of people saying, I wish I bought Nvidia 5 years ago at say $3 or 10 years ago at say 50 cents. I'm sure that there are people who bought Nvidia back in like 2004. And by 2014, they were barely up 90%. Yet by 2024, they are up over 300,000%. Now, I know this is off topic, but I just wanted to make a point about patience. Because I can guarantee you that there was a lot of people that laughed at anyone holding Nvidia stock who were saying that this was going to be a millionaire maker. So what do you think about this? Are you bullish on SoFi stock? There is always a lot of talk on social media about SoFi, but always do your own due diligence. Remember that I'm not a financial advisor and this is not financial advice, so always do your research. But if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on Twitter and I'll